Tomorrow we have the highly anticipated CPI inflation reading for September, and Wall Street's estimates are 0.1% month over month for headline, and then year over year 2.3%. And then Wall Street's estimates for core CPI, which is minus volatile food and energy, are 0.3% month over month and 3.2% year over year. In my opinion, I think that's pretty much what it's going to be. I think maybe perhaps core CPI will be a little bit lower, maybe at 3% year over year and 0.2% month over month. Obviously, we have to see, but all eyes are on tomorrow's CPI inflation reading. Yesterday, the market did very well, powered by NVIDIA. NVIDIA announced an agreement with Foxconn to manufacture NVIDIA's super chips in Mexico. They wouldn't be doing this if there wasn't so much demand for NVIDIA's AI chips. So this is important. And then TSMC, Taiwan Semiconductor, posted really strong sales and demand for AI chips. And Taiwan Semi is the leading manufacturer of AI chips. So this shows that the demand and company spend for AI is very strong to get hands on these AI GPU chips. So on the one hand, the U.S. markets did well yesterday, but the Chinese markets didn't do well yesterday. The Chinese markets had their, I believe it was their worst day since 2008. Initially, over the last few weeks, the Chinese markets did very well with strong stimulus measures announced by China. But it seems like yesterday, it seemed like China isn't backing up their initial stimulus with more stimulus, at least on the fiscal side. Market participants and investors were thinking that the stimulus from China would be even larger on the fiscal side, and we're a little disappointed from that. And as a result, the rally that we saw over the last few weeks started to fade yesterday, with NIO, Alibaba, JD.com, Pinduoduo all declining because investors want to see continued stimulus and the amount that they were hoping for, especially on the fiscal side as well. So we have to monitor that situation. And I also want to talk a little bit about crypto. You know, Bitcoin's been trading sideways for a little over 6 months since the halving, and this isn't really too normal during a bull market. This is probably the longest period of trading sideways consolidation that Bitcoin has had in an upward bull market. So usually the longer an asset trades sideways or consolidates, usually the bigger the move upwards when it happens. So you know, at times of despair, it's easy to get discouraged, but I'm still pretty optimistic that Bitcoin could at least hit 100K by year end, if not more. So obviously, let's stay tuned. Yes, there's some risk right now with seasonality. October could be a little bit weak, especially ahead of elections. But once the elections are behind us and geopolitical situations are contained, I think the market could do well. Oh, and before I forget, I wanted to touch on a very big note. This bull market's about to turn 2, and since then the market's up about 61%. The average bull market is up usually 181% and taking 5.5 years. So we have the market could go almost 3 times as high, and the market could go about 2.5 times as long for this bull market. So that leaves me pretty optimistic that we have more steam ahead in this bull market, in my opinion, fueled by AI, and with the Federal Reserve cutting interest rates, with inflation going down into a strong economic backdrop with good technology fueled by AI. This is a Goldilocks environment. It reminds me a lot of the 1990s and the Roaring 20s, in my opinion. So let's stay tuned.